welcome to the Capital Discussions Trading Group 2. I'm Nunamaker. We have, let's see, looks like 13 people in the room right now, so thanks everybody for coming in the kind of slow period in between Christmas and New Year's. I know I tried to get a couple of credit spreads filled yesterday, and the market just, nobody was biting, so I just gave up. And I think maybe it's not a bad idea to kind of take off trading. So Ray, you were saying you and Lewis were comparing notes. Have you had any bits that you want to share?
Not yet. That's why we're doing this. But when we get done with this, there definitely are some insights that would be probably worth sharing.
Okay.
Hey, Riley.
Hey, Nathan. You might need to self-mute yourself when you're not talking, Nathan.
Yeah, I hear some kids.
Okay, I'll mute it. Sorry about that.
I've got 4 of my own, but the youngest is 22 now, so brings back some memories. So let me, I can share my desktop and show you my trade. I've only got one on right now. I was thinking about putting an M3 on, but the way the markets have been going, just so quiet, I might still try and get it on this week, but I'm not hopeful. Markets seem like they're pretty asleep. So this is that floater trade I started, when was it, December 9th or something. Right now it's 97% probability of profit. You know, I've got the extra debit spread here, so it flattens the T plus 0 out quite a bit. So we're, let's see, we're down 5.5 points right now. So let's see, is that the right price? 2085. Yeah, that's it. So that's where we are right now. I'm hoping, you know, we have a pretty good chance of continuing this pullback. Let's see if I bring up an SPX chart to a daily chart. So, you know, we could easily come back in this 2050 to 2000 range, which is kind of the sweet spot for this trade. 2050 to 2000 is right here. So, you know, and I don't even have to hold the expiration. If I shoot for this line in 4 days or this one, say, next week, it sells off, you know, 20 to 50 points, it could be pretty good for this position. So this is kind of like half of a Dan's broken wing butterflies, essentially. That's kind of what the floaters turn into, broken wing butters, but you just start neutral, and then you decide which way you want it to lean based on where the market goes. And if it sits there, then you have pretty good theta. So so far, I haven't lost money on these trades. This is my third one. You know, there's always a first, right? So the danger on any kind of trade like this is you get a massive move early in the trade down, but because we're starting neutral, the risk is really low. I think I had maybe 1,000 or 2,000 in margin when I started. You know, now I'm up to 12.6, but the portfolio margin is maybe 7. So it's pretty low margin trade, but you know, the risk on an SP, like a broken wing initially, like I said, is the market just moves down right away and you get pushed down in this region. But this trade where it starts off neutral, you don't really have that risk. So I've kind of enjoyed it. It's working out well. I was trying to just add a little bit more credit here.
So Tom, while you're setting that up, can you go ahead and promote Dave and Todd?
Oh, yeah, sure. Let me get a list here. There we go. Hey, Dave. Nice to see you. All right. Thanks, Ray. I don't have that window open, so thanks for letting me know. If you see anybody else come in, just, you know, mention it. That's really all I've got going on right now. I was looking at the SPX, and you can see This is the Christmas period. If you look at the futures, you can see the volume. And let me put that on maybe a 1 month chart. So you can see the volume is really light this week. And any move up is kind of suspicious because it's on light volume. So when everybody gets back to trading in the new year, it won't take much volume to push it lower. So that's kind of what I'm hoping on this trade. If not, it's still going to make a little bit of money. And again, I was trying to just raise up this side just a little bit to bring in some more cash, but not strictly necessary. It's a pretty low risk trade at this point. So any comments or questions about this trade? Here's something in the chat. Oh, hey Dave. I noticed the VIX futures are all in contango. I have it set up at IB like this, and if you just see all the numbers going up, then it's in contango, so it's easy to figure out. Some people have a chart, but as long as the numbers are all increasing, and then everything's fine. Current. What's that?
Yes, Ray. Did you choose the SPX as your underlying to make it similar to a half twin peak, or you were trying to keep away from the rut because you were doing other things in the rut, or how did you choose the SPX as your underlying for this?
Well, SPX seems to move a bit less than the Russell when things get excited. So, and it's got a lot of liquidity. So overall, I've had pretty good execution. I usually get filled, at or near the mid price. So I've been pretty pleased with the fills, and there's lots of liquidity, especially if you look at the open interest and volume. Let's see, where is it? Open interest. Open interest. Come on, option view. Oh, maybe because I'm talking to IB. Let's see, volume. Open interest. I guess IB is not going to give that. All right, so let me stop that and go to back trader. This will be like a half an hour ago. Hopefully it'll have some open interest. Okay, there you go. So 61,000 contracts. So if you notice on the 25 points, there's a lot of open interest. Here's 120,000 contracts. So it's nice to trade on the 25-point strikes if you can. But I guess that's why my fills have been okay, because there's so much volume on them. But that's really the only reason. It moves a little bit less, on the Russell. Like here today, SPX is actually moving more percentage-wise, but generally I find it moves a little bit, SPX less than the other one, so it's not quite as volatile. Depends on what's moving the market, of course. I do like the euro, especially going down, helps my mortgage. This is a great chart for me. So, the lower it goes, the happier I am. So, hitting 5-year lows, I think.
So you don't have a fixed mortgage? You've got one of those that fluctuates based on the interest rate?
Well, my income is in U.S. dollars, so my mortgage is in euros. So I have to convert my dollars to euros. So as that rate goes down, it costs less dollars to buy the euros.
Got it.
When the euro was up at 160, my mortgage was like over half my pay. So it was crazy. Hopefully it'll be paid off in a few years, and then it'll be okay. But right now, it's pretty important for us to watch it go lower. That helps a lot. Historical performance, not really. I mean, this is the third one I've done. It's kind of a trader's trade, so there's no a lot of set rules. It's just you manage your Greeks, and then like the extra debit spread here helps with the flattening of the T+0. If I didn't have that, it would look more like this. So if I compare those two, and I get rid of some of these extra lines, you can see how it falls off a lot faster. So if we have a down move, obviously it's going to take a little bit to get that far, but it pushes down this whole tent, and it just gets underwater faster. The debit spread keeps it up nice and high, and if you add, the extra lines, if it comes back, say this is in 9 days on this middle line, you have a pretty good profit with that debit spread. So it actually makes quite a bit of a difference to have that. I think Tony Sizemore would call that a gear, but it does a nice job. Let's protect things. I could maybe do some kind of rules for this, I guess, put them together. I'm involved with Quanti Carlo, and I know they have a lot of data for back testing. So maybe I can talk to Larry Richards about maybe trying to automate some kind of back test for this thing. That's an interesting piece of software. They're going to try and release it next month. Larry keeps slipping his date. He's going to speak with us at the roundtable, but it's under development. They've got a big team working on it, so it's an interesting program. I know Tony Sizemore is working with David Will to try and optimize his strategies with it. But anyway, we'll see that more when Larry has his demo at the end of January. And let's see if there's anybody else that needs to get promoted. Looks like there's one person, Bruce. Does anybody else have any trades they have they want to share with the group, or questions, or do you want to go over anything in particular?
I have a question for the group, if someone might be able to speak to it or answer it. I asked it in Monday's session with John Locke on the update. I had gone back and rewatched the Group 2 one where he did that short demo of the underlying moving down. And at the end of that, he made a statement that when you start being able to do the advanced M3 in a efficient manner, that you could actually double the size of the M3 without increasing capital. And I didn't understand how he would do that without increasing capital, and I wonder if anybody here could speak to that, whether he was talking about, yeah, you're not increasing margin capital, but you will be doubling up your cost of butterflies, but I just don't know. So if anybody can help me understand that, I'd appreciate it.
I haven't seen his advanced M3. Do you have any summary of what the difference between the advanced M3 and a regular M3 is?
Not written down. That's that's that project I'm actually working on.
Okay. Do you have any information? I mean, I haven't even seen the advanced M3.
Part of it is putting everything into the puts, and then trying to manage it more with verticals and condors, and actually how you reposition the butterfly to control your deltas and your vegas. But that's a horrible answer. There's a whole lot underneath all that would take too long to get into.
Yeah, sounds like it's quite an update from the existing M3.
Right, and I was really intrigued if he's found a way to be more capital efficient, because he was saying in that little demo period there that you can basically double your returns, thereby making it more equivalent to the returns we would see on a bearish butterfly. And I asked the question Monday, but he wasn't prepared for the question. He got stunned with the question and took the easy answer, saying, well, it'll be in the advanced course, and I'll look forward to when that happens and take that course. But I was just curious if anybody that does these one-on-ones or has worked with him already knew or could point me in a direction on that.
All right.
Yeah. Hey, Ray and Tom. This is Dave. How you doing?
Hey, Dave. How are you?
Marvelous.
Very good. Hey, I can probably I can probably speak to that a little bit because I don't know what John is going to be coming out with, and I don't know exactly what his I don't think his course is ready yet to be I guess he's going to record that. It looks like sometime in the March time frame. So, but I know that I watched something that he had done, and I've actually been testing, I guess, what I thought I had heard as to how to control margins a little bit better. So I've actually done a couple of trades last month in December, and I've got 2 more on right now that I'm actually employing what I think is a very simplistic way to be able to try to put one of his trades on that normally you would need like $50,000 to do an M3 and planned capital, and I'm only using like 25.
No. Would you mind sharing that?
I don't have anything right now. I mean, it's I don't have. I'm on my wrong machine right now because I've switched computers here. But,
sure, fair enough.
I can. I mean, at some other point I can, but I can talk to it, I think. And it's pretty. Like I said, I don't know what John is coming out with, but I know that what I'm doing is simply I put on a standard butterfly, just like you would normally do for a 50,000 planned capital position. I don't know, Tom. Do you want to maybe just put it up on your screen and we can kind of just show it on yours?
I could if you talk me through it.
Yeah, it's very simple, and maybe just do it in the Russell.
Okay, let me switch over to Rut here. Maybe I'll back trader. That might help. I get a little slow. I've noticed stuff on an index. So I've got the Russell up.
Yeah, maybe you can start one out in. It's hard to let's see. Maybe you just pop one into the February time frame.
Okay, sure.
So
you said it's most.
So if we put one on, if we were to put one on like right now, the market is at what? What's the market at right now? 12.16. Well, I don't know, like around what, about 11.90, I guess.
Okay.
So maybe put 20 shorts there.
All right.
And then just put 10 longs on, 50 points there.
Points of. All right.
And this is just a standard M3 entry, and then a long call somewhere up around 90 delta or so.
Right. Let's see. I might have to increase the number of strikes here. And then
Can you also mute Bruce? He can always unmute himself.
oh yeah. Let's see. Oops.
If you want, just for ease of that, you can just go grab that 1160 if you want, just for demonstration purposes. It's not going to make a big difference.
Oh yeah. Okay. Okay. So with that, we have this shape, which looks like your normal M3.
Right. Exactly. So if you go back to the matrix, the this position is about about 17,000 in margin.
Right. Mm-hmm.
So the problem that comes in is that when you start doing some adjustments, and let's say you needed to make an adjustment, and let's see, can you commit that or convert it, Tom?
Yeah, let me just put this in a different account.
Yeah.
This one should be okay. Okay.
So let's say, for instance, that you're normally this is a 50,000, Ray, this is a 50,000 planned capital trade, right?
Yes,
Right.
sir.
So, but let's say you needed to do some adjustments. Let's say we're moving up. So take 10 of the 1190s and move them up a couple of strikes.
Okay.
Just roll
Yeah, like-
up, yeah.
Okay.
Yeah, it doesn't matter, yeah, something like that. Okay, so notice right now what your margin has gone up to. It's over, like, well, the only way that I really know what it is, you got to go to the graph. Then
Yeah.
so it's over 30,000.
Yep.
So this simple, so that a simple adjustment to the upside has caused the trade now to be a margin. You would need to have $30,000 in your account to be able to do that adjustment.
Right.
Or else
And the PM account.
Yeah, this is in a normal, Reg T account.
Right.
This has nothing to do with if you've got portfolio margin. So the simple thing that I saw that John had done, which is, very simple, is he'll just take the 1140s and move them up a strike.
Oh, instead of doing that.
Well, no.
Oh.
So in other words, still make the other trade.
Okay.
So let's say you're doing that, and let's say, okay, so now you see the problem. So now let's go put a solution in, and just move those 1140s, all of them up one strike.
Like that.
So we took
Like
our
that.
we took our
If you
50.
if you go back to your analyze graph, you can see how it changed the margin.
Right.
And now you're back below 25, and you're at, well, you can see it very clearly on the screen. It goes from 30 down to like 22 or something.
Right.
So this method, and I did this last month in December on 2 different accounts for my daughter and for my wife, and this worked beautifully. It's like I said, I've only done it that one expiration in December, but I've got those trades on again in January, and the same thing has happened. Basically, you put it on, there's no difference the way I put it on, but once I had to do an adjustment, I had to go and do this kind of a capital efficient, modification if you want. Now, the one thing that may happen when you do this is that by rolling those 1140s up to 1150, you're actually increasing your negative delta. So if you fine-tune the adjustment by moving that 1190 up to 1210, it could mean that you may have to go and, do a little bit more fine-tuning if you've added so much negative delta into the trade because of that capital efficient or whatever, I don't know what John's going to call it, margin adjustment kind of thing.
Right.
So you may have to take, like the 10 that's up at 1210, you might have to take, a few of those and move those up to 1220, let's say, to try to reduce the negative delta a little bit. But that's
So something like that.
Yeah, I mean, we're not doing this at a time. If we went into BackTrader and we went through a live example, we could actually show it better. But this is the process that you would actually go through. Now, I don't know if, like I said, I'm not sure where John talked about this, but I picked this up, and I don't know if this may be just a part of what he's going to be, presenting in, when he puts his full program together for advanced position management for M3s and ROC and M9s. But this is just one piece of it that I had heard, but yeah, I don't know. This may just be the tip of the iceberg. Maybe he's got a lot of other things that he would do, but this is the only thing that I've heard so far. And so I figured I'd try this, and so far through a grand total of 1 month, it worked fine.
Yeah. Yeah, it looks like
the nice part about it is that this particular trade for me, that month, since if you're figuring your percentage increase, if this was on a $50,000 position, this would have been an 8% winner. But because it was on only 25,000, well, it was a 16% winner. because my denominator was 25,000 instead of 50.
Right.
So,
Great.
I don't know
Thank
if
you
that
very
answers,
much.
I don't know if that answers the question, or not, but that's at least what I know so far.
Yeah,
Cool.
Tom, this is Andrew.
Oh, hi, Andrew.
Hi. I can give you a little bit more information. John has presented a little bit of this in his group mentoring sessions. And basically, the concept involves moving away from butterflies towards using whatever option combinations deliver your desired results. It's a lot like the process Tony Sizemore teaches, which is trading by the Greeks, rather than using a rigid butterfly formula.
Mm-hmm. That makes more sense. You use what's appropriate for the current market conditions.
Yeah, the course, the last thing he told us was going to be filmed in March. That's the schedule, and I guess it'll be released shortly after that. But we've seen a little bit of it in group mentoring, but what was presented here is part of it. And he said a couple of times that, the advanced course would be moving away from butterflies and more towards managing by the Greeks.
So, Andrew, you're in reference to the twice a month thing?
Yes.
Okay. How long have you been doing that, and can you share any more about that? I've considered joining that group.
I've been in it since the beginning, and I've found it very worthwhile. He goes over everything. He's covered, technical analysis. He's covered psychology, and he's covered, trading the various trades, the rock, the M3, the bearish butterfly, and everything from, simple techniques to fairly advanced techniques. If you want, if you really want to understand the trades, it's definitely worthwhile.
So how many usually attend, and
It's, I would say probably 10 to 15 people. I think there are more in there. I know right now my schedule keeps me from attending live, so I watch the videos. And one of the great things is if you join, you'll have access to all the prior sessions as long as you're a member of the group.
and is the group a group of mature, people in the John Locke type systems, or is it someone still trying to learn it would still be able to participate and benefit without dragging the group down?
Well, there's no back and forth. It's John basically presents a lecture. He will ask for questions, and if you have a position you want him to look at during the session, he will look at it as long as you give him some advance notice. If you send him the position ahead of time, but most of it is John lecturing. There's a little bit back and forth if you want to do that, but most people tend not to.
Thank you.
Oh, and Mohit, the fee for John's program, it depends on, at least it used to be this way, it depended on how many of his products you bought. I think if you'd bought one, it's $200 a month. If you bought two, it's $175, and three or more, it's $150 a month. So I think that's how his pricing, at least that's how it used to be. I assume they haven't changed that.
That's still the pricing right now.
Okay. I know I'm helping John with his website, and he had mentioned to me he's thinking about building his own member site, so he might be moving all that to his own site from SMB, but that's still something for the future. But yeah, he had a little bit of a a snafu yesterday. GoDaddy, he's setting up another domain, and they messed up his website and reinstalled WordPress. So I had to, fortunately, I had a backup external to his hosting company and got it all restored. But that was a little bit of a scare. So.
I got a question for Andrew. Is for all the people that get together with these things, with the group mentoring, is there some sort of a Skype group or something where people, get together and chat and stuff about what goes on, or just a kind of a group where people actually get together?
There's no group right now. I have a couple of friends that trade John's trades, and we talk about the trades every once in a while by email, but there's nothing that's formally associated with the group mentoring, at least not right now.
Well, I could talk to John about maybe setting up a private forum for him, either at Capital Discussions or on his site. That might be useful.
Yeah, I know SMB has tried a couple of times to get some forums going, and there was just no traffic. They also have an options chat room that's very quiet.
Yeah, I set the forums.
That chat room is broke because I've been trying to post to it, and I've sent support questions letting them know that if you post, it doesn't come through. That's why it's quiet.
Yeah, I have the exact same problem. I told Andrew Faldi about that a while ago. He said he was looking into other software, but I haven't heard anything back since.
Yeah, I set up their forums for them, actually, and the equity guys got some traction because Mike Bellafiore pushed it to his students and to had them post things in there, but Seth and Andrew never really directed anybody to use the forums, and I don't think they actually check them themselves. So that's probably the reason that the forums never really took off for the options side of SMB.
Yeah, well, Seth had actually asked me to post in there, and I can't post. I can log into the chat room, I can type comments, but when I hit the button, nothing happens. I'm glad to see other people have that same problem. It's not just me.
Right.
No, and I'm also not being able to get access to their archive videos like Derek Vanderpool's the other day. I missed it, so I wanted to go watch the archive, and all I can get to is the advertisement, but not the actual video. So I've submitted that as well. I don't know if other people are having trouble, but that's one of the beauties of Capital Discussion and all of Tom's work that he's doing for us here.
If you're an Option Tribe member, you should be able to get access to those videos.
Agreed.
Yeah, I mean, this afternoon, John is doing a session on the rock trade that could be really interesting.
Yeah, that does sound good. I saw Dan Harvey joined us, but I don't think he's called in yet. So, Dan, are you around, or just curious how your trades are going? I imagine okay. That slow grind up the Twin Peaks should be fine. I don't know if Dan's going to call in or not. Andrew, do you have, or Dave, do you have any trade? I don't know, Dave, you're not on your computer. Andrew, do you have any trades you want to go over or show the group?
I have 2 trades on right now. I can show you if you want.
Yeah, let me pass the ball to you.
Okay, can you see my desktop?
We can.
Okay. I have a January M3 on right now, and let me go back. It was started on November 21st at 11:50, as the market went down, I ended up rolling down twice. Eventually, I went down to 1110. And then as the rut rallied, I ended up having to roll up. So my position now is at 1180. And unfortunately, due to the roll-ups, I'm down money. But with 2 weeks to go from Friday, that T+0 line should start to move up. My goal now is to keep the position the way it is now, and as we get closer to expiration, if we don't have a pullback, eventually I'll have to roll a little more on top of the market and wait for theta to work.
Yeah, it looks like you're in pretty good shape still.
Yeah. The only problem I have is if the Russell keeps going up. I go positive Vega about 1225, so I'll have to start adjusting. So far, volatility is held up. We didn't really get a pullback in volatility on this rally, at least not as much as you would have expected. So being negative Vega didn't really help the position. I got all the negatives of the negative delta, but none of the benefits of the negative Vega. And the other position I have on is I just started a February bearish butterfly last Friday. With this rally in the Russell, I think it's a pretty good opportunity for the bearish butterfly. I started it at 1190. And it's a little bit down right now, but I don't think the Russell is going to outrun this trade. My first add point will be at 1230, and at 1230, the delta theta will be right on the borderline, so I may be able to add without having to do a roll, which is always nice. I hate having to roll up because you always end up losing money on the roll up.
Right. So how do you like the bearish butterfly versus the M3?
I like the bearish butterfly a lot more. I wish I had entered a bearish butterfly for January, because on the pullback, I would have had enough of a profit to get out. Whereas with the M3, you don't really see a good profit until time goes by.
Right.
The problem with the bearish butterfly is that it's a disaster when the Russell just goes straight up on low volatility. From the end of 2012 to the middle of 2013, it was really tough. But since the fall of 2013, the trade has been okay. You have to do a little bit of timing, and you have to be careful, but it's a much better yielding trade, which is what I like about it. You know, 2012 was like a perfect year for the bearish butterfly. It did really well, and I'm hoping we go back to those conditions soon.
So what's the general game plan with the bearish butterfly if it goes up? Do you just roll up parts of it or just add on to it?
Ideally, you would just add a second and a third butterfly to create a nice big tent. The problem comes in when the market is skewed and you start getting too much negative delta. Then you have to roll the position up before you can add. And that's what was happening until recently. You know, right now we seem to be right on the borderline. And it's always nice when you can add in. You know, the ideal scenario is that you put the position on when you're close to a top, and maybe you add in a second and maybe a third butterfly, and then you get that pullback, and the money really comes in quickly when that happens.
And how long have you been trading the bearish butterfly?
I've been trading it since the middle of 2012. And overall, it's been a great trade, except for those 9 months where it was really a problem. I think even John's website trade lost money in 2013. It was just such a bad year, especially the first half of the year, where when the volatility is low, the butterflies get really expensive. So you can actually use that as a guideline to when you want to put the position on and when you don't want to put the position on. You know, if you got to pay more than $10, $11 for a butterfly, or if the delta on the butterflies are more than, 8, 9, then you might want to think twice about putting the trade on.
That's a good rule of thumb.
Yeah, I mean, that's one of the things John taught us in the mentoring sessions. It's a trade where you have to do a little bit of thinking. There are solid rules, unlike the M3, but you have to use some discretion on when to use it. The M3 is really a bread and butter trade. You can put that on just about any time, whereas the bearish butterfly, conditions have to be right for it. When they are, it's a great trade, but when they're not, you really need to stay away from it.
Right.
Yeah, I think over the years I've viewed the M9 and the rock trade as kind of opportunistic trades.
Exactly.
When the conditions are right, but for me, the M3 is kind of my basis or baseline that I know I can pretty much put it on at any time.
Is the M9 a new trade? I haven't heard that one.
No, M9 and bearish butterfly, same thing.
Oh, okay, okay.
I've heard some people call the rock trade an M15, so.
Well, it's kind of funny because John has the M21, which makes it sound like it's a trade, and yet it's really not a separate trade. It's a combination of using all of them along with market analysis to decide what to put on to fit the market conditions.
Yeah, John told me that M3 traders that, I guess, I don't know if it's the ones he mentored or who he was talking about, but he said the M3 this year was up, in the last 12 months was up 60%, but the M21, he had some students that were up 200%. So I guess that market timing really helps in getting the right trade on.
John's had a really good year with the bearish butterfly. I know he's up well over 100% on the bearish butterfly this year. And that's just using guidelines.
I just looked at what my M3s did this year, and they're just a little bit under about 7%.
Total for the year or per month?
Well, per trade.
Per trade, okay. That's excellent.
Yeah, I looked back at about 2011 when I first started doing them, and I was usually in the range of about 3 or 4%. So things have got better, as they say.
Right.
I think it was Monday's session that John did where he went over his results for the year. So you can go to his website and look at that. And he goes over the returns for the trades that he did.
Well, thanks for showing me the trade you have on.
The stocks are still trying to decide what they want to do today.
How's the volume? Let's see. Still pretty low.
Yeah, let me see. The futures volume actually isn't that bad.
So Mohit says, so the bearish butterfly need to be out when the VIX is around 15 or 16 or higher.
Yeah, that's a pretty good guideline. You don't all you have to do is look at the price of the butterflies, and that'll tell you what the volatility level is. You know, in 2013, if you traded that, you were starting butterflies at, if I remember correctly, $16, maybe even higher. And when the butterflies are that expensive, you know the volatility is too low.
And what did John say to do in those cases?
Well, I mean, there are techniques that you can use, such as market timing, but you're probably better off sticking to an M3 and, as was said earlier, making the bearish butterfly an opportunistic trade.
So basically just don't do it.
Right. You know, when conditions are good, you know, if you've had, let's say, you know, 75-point rally in the Russell, and you know you're getting close to some kind of short-term top, then either substitute or add the bearish butterfly to your M3. Or the rock trade. The rock trade's another one that you can use. I think it has a little better tolerance for a move than the bearish butterfly, because the butterflies are positioned a little wider.
Yeah, I think you hope also with the rock trade, you wouldn't be drawing down as much as compared to the bearish butterfly.
Right. Well, with the rock, a lot of times you're starting as an M3, which gives you some protection.
Right.
Of course, the one downside to the M3 is if you get an early move down, then you don't really benefit as much as you do with the bearish butterfly.
Yeah, you're safe, but you don't prosper.
Exactly. And that's what happened with my January trade. The move down came a little early. You're better off when the move comes later on in the trade after that T+0 line has inflated.
Right.
Mm-hmm.
That's true with a lot of trades. If it moves early on, you get in trouble. So does anybody else have any trades they want to go over, questions, or anything for the group? We're coming up on an hour, so if not, then it might be a good time to stop. But I don't see any more questions.
Tom, let me ask this. The question I asked in the rabbit trail that sent us down, is that an acceptable question for this group?
Which question?
The whole one about efficiency and how to use an M3 for it, and there's things like, you know, I just want to, I don't know, the group is so young, I don't know what were the intent and what questions we should ask or not ask.
Well, I mean, it's a group for us to learn, so I think there's very few questions I would think that are off limits, so, you know, we're all
Cool.
here to learn from each other.
I just figured that was good for everybody to hear.
Yeah, absolutely.
If anybody knows where the market's going to be for January expiration, please share it.
I'm guessing a little lower, but we'll see. I don't have it. My crystal ball's a little bit blurry right now.
We just need to know when.
And Mohit, yeah, I'll ask John if he could maybe do a presentation like the roundtable on the bearish butterfly. I think that would be beneficial for everybody. All right. Well, I think this is probably a good stopping point. So thanks again, everyone, for coming on a slow market day in between the two big holidays. So enjoy the quiet time with your family and friends, and we'll be back again after the 1st. And in German, they say, what is it, Guten Rutsch, like have a good slide into the new year. And I hope everybody has a good holiday, and we'll see you back in January.
Very good.
Yes.
Happy New Year.
Happy New
Yes,
Year, everyone.
see everybody next year.
All right. Bye-bye.
Yeah, bye-bye.